So it's all about crypto today. The last few days, really, since the election and Tesla, it's the Elon world that we're focused on again. Elon spent something like $130 million of his own money on Trump's campaign. And since the election, he's increased his net worth by, I don't know, something like $60 billion. So he's a smart investor, right? He's just a smart investor. No two ways about it. And so we see Bitcoin with a little bit of follow through early on, tag that 90,000 level. Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only, which is pretty incredible. And then a little bit of a pullback. So taking a little bit of a breather. I wouldn't bet on it coming all the way back down, but there's some interesting levels here that we could watch. It's hard for me to get super bullish. I'm getting out of a lot of our trades, and I have been over a few days, but a lot of our trades really, Mara, Coin, CLSK dumped a whole bunch today. And even the sort of second, third level ones like the SoFis and the Hoods, getting out of all those positions for now. We have some in our cash machine portfolio on Hood, for example, that's just kind of generating some cash flow in that room in our Discord. So there's some of those going on, but generally speaking, I'm taking off a lot of that long delta risk at this point because this has been pretty incredible at this point. And so we can kind of look at some of these other stocks here. Let's take a look at the SPY. I think what's going on in the SPY is we're consolidating a little bit, obviously. And I think we've just had this massive move. We're starting to get a lot of dealer gamma getting piled on, right? So what that means is people are selling. That upside skew jammed up. I talked about that on the weekend. We saw it was underpriced, which we mentioned weeks ago, underpriced, and then on this panic parabolic move, that upside skew really took off, right? So they were pushing up those call bids. So now people are coming in here going, okay, this is great. I'm going to start generating income on my stock. I'm going to sell covered calls, hammer out some premium. That's saddling dealers with a lot of gamma. And what that does is it kind of brings down volatility potential. It has the potential for that. Nothing I say is set in stone, but the theory is that, well, it's more than theory. I used to do this as a market maker, as an options market maker professionally, and I know exactly how this works. You get saddled with a lot of gamma and you start trading smaller and smaller ranges. It becomes self-fulfilling. And before you know it, this market is just kind of sitting around and maybe sitting around that 6,000 pin. Plus, you've got that upper JPM collar above us. It's going to take something extra for us to keep going. Now, we've got seasonal, we've got corporate buybacks, we've got CTA, right? As volatility comes down, there are strategies out there that have to keep buying into this market. It's a self-fulfilling process, right? A circular kind of positive feedback loop. And so there's things that are going to keep us bid here. So and we're going to talk about a VIX trade in a moment. But right now, I don't think the sell-offs get too huge, and I don't think the rallies get too huge either. So let's take a look at volatility. Okay, so here's your volatility typically after an election, right? 10 days after an election. The red line here, election, and your typical movement is the blue line. That's what we typically get, sort of 10 days of volatility coming off. What happened this time? Well, we went in a lot hotter in the volatility space. Everyone's been talking about this, the move index, the VIX. I mean, everything was super high stress, and it came right out of markets, but very quickly. Look at how fast worry came out of this market. So we kind of hit these 10 levels we find on average tends to be the bottom in volatility. We kind of hit that early. And so what you have to know is, and we picked all sorts of amazing vol crush trades from SVIX to SVXY to VIX butterflies to all kinds of stuff, which worked out great in the community. And I've been mentioning them on some of my other shows. But what the way that works is initially on that big vol drop, what that is exposure to Vega, right? So when you're short volatility and volatility resets lower very quickly, that is short Vega exposure. That's where you can really make a ton of money. So that's what takes the VIX, for example, from 20 to 15 is a big Vega move, right? So the product on the futures or on November and December futures, but that's beside the point. Volatility reset, that's your Vega exposure. What you have after that, when you have a slow drip, 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 as I call it, which is after a big event, you get volatility coming down, and all sorts of players start coming in going, oh, it's cheap again, it's cheap again. Well, it's not really, right? Unless you do get that big sell off, it's not cheap again. You're going to get a little volatility echo, but what you get is more drip, 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 and your torque becomes theta. Your torque has gone from Vega to now theta. So theta is going to be where you can potentially make a little bit of Vega in there too. So we're setting up some trades. We did a little bit already where we're going to play that further volatility crush in a very limited risk kind of way, right? So we don't put on these insane trades where you have unlimited downside risk. Limited risk, I think there's still more money to be made. It's kind of the same thing as long stock in a way, but this is playing more specifically in the vol space. So very interesting stuff going on and how does this happen? Okay, well, let's take a look here. We've got the VIX futures before the election, very panicky, unhappy, as I showed in my last video, and now very happy, right? So we're going to get these, basically, these things are rolling in a product like VXX UVXY, exposed to an index that is effectively rolling a 30-day exposure of the front two futures. When the picture looks like this, with the VIX futures above, VIX cash, which is in the green here, this product rolls itself to a loss, right? So gravity is going to bring these futures down towards the VIX cash as we get nearer to the expiry. At November expiry, these pretty much have to be the same, right? So this is going to lose value. These products are selling the front, buying the second. So December's a little bit lower. So it's not typically in here. Next month, we might get a little bit better opportunity for vol crush because we're going to have a little bit more pronounced gravity effect on those front two futures. But right now, the front two futures are the NOV and the DECE. And come November expiry, the full exposure in something like VXX is going to be DECE. And that's already going to be a little bit suppressed because of the holidays. So what we're seeing is that theta effect that I'm telling you about, the torque that you're getting from the passage of time now, right? The Vega effect was movement. That was movement and volatility. It was stocks getting happy again, everybody throwing a big party, and that's where the torque came from. Now the torque is a little bit harder to come by. It is theta. It is the passage of time, which we can't speed up, of course. Time is time. Each day has to go by every 24 hours, right? And that's going to play into your theta benefit. And so right now you can see a product like VXX, all else being equal, is going to erode basically down to from 44.97 down closer to 44. Something like UVXY, 2104 down to 2044. And these two are the opposite, right? The SVIX and SVXY, which we are positioned in, these are going to grind up. Now, sometimes these numbers get a little bit bigger depending on where you are within the expiry of these futures and the shape and the distance to the VIX cash. So there's a lot of things that come into play here. Right now, this is quite positive. It can get more positive, and of course, it can get negative for this. These products can actually flip in the way that they have their performance. So when these futures are like this, guess what? VXX and UVXY are doing well. They have the opposite effect. They're starting to make money every day, whereas SVIX and SVXY are going to lose money every day in this kind of unhappy environment. Now, this environment is something you probably see about over history. You're going to see probably more than 80% of the time. So the happy environment is more your norm, whereas this and throws everyone for a loop, and it can get very ugly. So these are very memorable moments because their ugliness, and everybody sees that in their P&Ls, in their stock portfolios, but this is much, much more of a prevalent natural thing. And as I've said in other videos and talks, I've said, listen, the VIX is mean reverting. It can get to 20, right? That's the average. I'm not arguing with that. It is the average, but it's not that meaningful. The VIX mode, where it likes to spend most of its time, is 12. It likes to sit there down in low, low levels for long periods of time. Now, I'm not making a call on the market. I'm not saying it's going to be VIX 12 forever. But one thing you have to realize as an option trader, as a volatility trader, is that it can spend so much time down at those low levels. Difficult to fight that when you're in one of those periods of low volatility. And we might be in one such period, right? We're all the way into the holidays. Nothing unusual. This is not a fantastic call by Nostradamus here, usually November and December are grind up. November's a great month for markets. Things are quiet. So hopefully that gives you a little bit of an outlook, an overview of what's going on in the vol space, a little bit on crypto, and hope you guys are making tons of money, and we'll see you next time.